Welcome back. Well, JSW Energy has completed the acquisition of Mahindra Renewable Energy portfolio. To alert our viewers, Mahindra portfolio assets have long-term PPAs with an average remaining life of around 17 years. To discuss this, we're joined by Mr. Prashant Jain, the joint MD of the company. Hi, Mr. Jain. Good morning. Thanks so much for joining in. Well, the last time we chatted, you said that in that fiscal year, that's FY23, it'll get completed. Well, you made it. So good on you. But what are the synergy benefits you'll get post this, this acquisition? And also, you were talking about the EBITDA number going up by close to around 450 crores. That's on, right?
Good morning, and thank you, Nigel. Yes, we are on track, and we talked about the synergies in terms. First is the capacity expansion and increase in our renewable portfolio. Second, the majority of their assets are close to our assets, which are being constructed in the state of Tamil Nadu, where we are building second hand. So there will be a lot of other synergies in terms of O&M and other supply chain will be coming to us. And we explained to the market that there will be an additional EBITDA improvement of between 400 to 450 crores over a period of 12 to 13 months time frame. We will achieve that. So I can see that the exit run rate in the month of the March 2024 will be with the increase of 400 crore rupees EBITDA in Mahindra portfolio.
Okay. Any indication of what the EBITDA growth would be post that? Once the 400 to 450 crores, is that an annual run rate that you're looking at?
So this asset was making an EBITDA of around 1250 crores. So this EBITDA will go up by another 400 to 450 crores. So between 1650 to 1700 crore will be the EBITDA. And that's what we explained, that on a normalized EBITDA of 1650 to 1700 crore, the enterprise value is 10,200 crore. So this is close to 6 times EV/EBITDA, which will be value accretive for shareholders from the day one.
Okay, 6 times EV to EBITDA and value accretive for shareholders from day one. Got that. Can you tell us a little bit about the opportunity as far as the PLI scheme is concerned for which you've applied? What are the incentives that you are eligible for at the moment? You have a stated target as well of 10 gigawatts by 2025. Do you hope to achieve, are you on track to achieve that? And is this, if you can just run us through, what the next 12 to 18 months would look like as far as the opportunities in the PLI scheme?
So two things. One is on the capacity front. Yes, we gave a guidance of 10 gigawatt by FY25. So we have already logged in 9.9 gigawatt, which we will be completing by June 2024. So we are much ahead of the schedule, what we have talked about. In addition to that, we have already logged in close to 3.4 gigawatt of the storage opportunities also. So we are ahead of schedule. And in terms of the PLI, India is not having enough supply chain for the solar panel availability point of view. That's why the government has come out with a PLI scheme, and we decided that we will be setting up a wafer, cell and module facility for a 1 gigawatt capacity. We have got 320 crore PLI under that particular scheme. We will be spending close to 1600 crore rupees in the capital expenditure. This asset will be primarily used to meet our captive requirement, because we are having a target of 20 gigawatt of the generation capacity by FY30. So we will be requiring quite a lot of capacity for the solar panels, and we will be importing in the interim polysilicon and then manufacturing wafer, cell and modules.
Well, Mr. Jain, could you tell us what's the value unlocking part of the business then? Everyone was saying you're going to scale up, and then in fact the green part of the business, there could be some value unlocking. What's the way ahead? Will you do an IPO? Will you get an PE in? Is there an InvIT you're planning? Give us some kind of a time frame, and what could be the likely outcome out there?
So we already outlined it, that our idea is to increase the capacity and build the business, and we are on track to build that. We have already done the restructuring of the business at this point of time. So JSW Neo has been constituted, which is housing all the renewable business of the company. And so we are ready in order to tap the opportunity whenever any suitable opportunity comes in. We need to keep one thing in mind, Nigel, that we are generating close to $350 million free cash every year, and it is going to grow as our capacity is increasing. And we are deploying that for the growth. So we have enough cash available at this point of time. However, as we did this acquisition of Mahindra, we are looking at a couple of more acquisitions as well as other growth opportunities. Hydro pump storage is another one opportunity. Green hydrogen is another opportunity. So we are looking to tap the capital from the like-minded people who are believing in the India story for the long-term perspective. So sooner than later, this will also happen. And I cannot put the timeline at this point of time, but I can tell you that, yes, we are in discussion with some people.
Okay, so you're saying that a couple of more acquisitions on the radar, the hydro pump storage space, the green hydrogen space is what interests you. Have you earmarked any kind of, war chest for these acquisitions? I mean, how much would you be pumping in? Will it largely be from your cash or your internal accruals, or would you look to tap the market?
We are a highly underlevered balance sheet, Sonia, at this point of time. We have already given a guidance that we will be spending close to 10,000 crore rupees every year for next 10 years, which can be done from our own internal accruals. And also we can lever up a little bit of balance sheet to do acquisitions. And at the same time, we will be looking at tapping the capital markets through the strategic investor or an IPO route at the JSW Neo level at opportune time. So everything is contingent upon the right opportunity at right point of time. But what I can say that we are absolutely future ready.
All right, Mr. Jain, final question before we let you go on your thermal capacity. That is, 20% is not tied up. So that gets the benefit of higher prices as well. So on the thermal side of things, could you tell us how is demand? Last time you joined us, you said it's rock solid. And give us a rough update on the merchant rates as well.
So power demand went up by 8.5% last year. March was subdued because of the unseasonal rains throughout India, because of which the demand contraction was there. And that is still continuing because we are seeing still the rains are in various parts of the country. The power prices were ruling close to 8.5-9 rupees, but now they are down to 4.5-5 rupees. And I'm quite upbeat about the power prices in time to come. However, recently last week, the cap on the merchant tariff have been reduced from 12 rupees to 10 rupees. I feel that is not a fair move by the government. It is well understood that it is the election year, but if there is a cap, there should be a floor price also. When power companies bleed, there is no floor, and still, power is being sold at 50 paisa or 1 rupee in certain time blocks. So if there is a cap, there should be the floor. But however, I am very, very much upbeat about the power prices in time to come because demand is growing quite robust and enough supply is not coming up.
Yeah, no, that you highlighted last time you were on as well. Mr. Jain, just one last question. We've been reporting how distributors were asking for hikes, and some of these hikes are coming through. I mean, so for example, in Maharashtra, it has happened. In the city of Mumbai, that's going through from the 1st of April. Some of the other states, it's going through. Although in states like Bihar, there has been a bit of a pushback. Could you tell us what is the overall aggregate situation, and in what way does it impact you?
So it doesn't impact us because we are not in the distribution business. And in any case, distribution business is also regulated one. So as the power prices go up, because, you need to understand that there is an inflation in everything. When the railway freight goes up, coal prices go up, or the transportation cost goes up, there is a power prices go up. And then when the power prices go up, the regulator decides a higher tariff for the consumer. And this is how it works in. As far as JSW Energy is concerned, it doesn't impact us. But yes, the thermal coal prices and as well as the power prices will keep inching up by 3 to 5% year on year.
Okay, all right. Mr. Jain, thanks a lot for joining in and speaking to CNBC-TV18. That's JSW Energy. With their plans going forward, both in terms of growth, they're looking at 10 gigawatts by FY25. They've locked in 3.4 gigawatts of storage opportunities, and they're also looking at a couple of more acquisitions as well. So the future is pretty bright. But let's do one thing. Let's talk about the tractor sales that came in from M&M just a while back. It's looking good, actually. Total tractor sales went up by 18% year on year. Domestic tractor sales were up 20%. And the company has seen record tractor sales in FY23 to the tune of 4.07 lakh units, which is a growth of 15%. Hemant Sikka joins in. He's the president of the farm equipment sector. Mr. Sikka, good morning and thanks a lot for joining in. 15% growth is what you saw in FY23. Do you think it will be easy to replicate that in FY24, given that, there are several concerns, primarily the concern being the impending slowdown in monsoons? How do you think all of that would hit growth?
Thank you, Sonia. So first of all, April, the month of March has been very strong for us. I mean, we have been able to clock almost 33,600 units, which is a growth of 20%. The industry has been only clocking a growth of only 12%. So overall, I think it has been very, very good for us.
Will it remain good is the question now, Mr. Sikka. Good morning, Prashant here. Because of, the unseasonal rains that we are seeing, the damage to crops, which is, reports are coming through across states. It's coming from Uttar Pradesh, Madhya Pradesh, wheat crops, widespread sort of devastation. In states like Maharashtra, we are seeing that. So what is your assessment from the ground, sir?
No, see, Prashant, what happens is that India is a very large country. And mostly in every year, we get issues like this in a couple of states. Even now, if you see it's pockets of Rajasthan, UP, North Gujarat, that we have issues like that. So overall, at an aggregate level, I don't think that the demand will be impacted that much.
Sir, just coming back to one point you made about the month of March, you said that it has been very strong for you. But overall, for the full year, can you give us any indication of how things would go? 15% may be hard to replicate, but are you looking at 10% growth for the industry as well as for yourself? Is it going to be double digits, or do you think single digits is something that will be feasible? Any outlook?
Yeah, so Sonia, FY23, as you know, has been very, very strong for the industry. When I spoke to you a few months back, we were talking about a growth of about 5 to 6%. Then we upped the guidance to about 7 to 8%. Finally, the industry has been very strong, clocking all-time high growth of 9,45,000 units, which is a growth of 12%. Very happy to share with you that the Mahindra growth has been 16% over this. So we have got some valuable share point gain. Our market share is upwards of 41%, and we have gained 1.2% market share in the whole of FY23. So overall, the industry has been very strong. Our performance for both our brands, Mahindra and Swaraj, has been very strong. And we believe that going forward, with the kind of cash flow that we are seeing with the farmers, the industry should remain positive. Let me also speak about what are the factors which have influenced this growth in FY23. As we spoke last time, Nigel, with you, that the monsoon for the last 4 years has been above normal. Now, this has never happened since the time records are kept, that is since independence. And if you see the reservoir levels, that is also running at a very high level. So as a result, the cropping has been very strong. The output, crop output has been very strong. The mandi prices are kind of being very firm. And let me also thank the government, because the government has been also upping the MSP. This year also the MSP for key crops has been in upwards of 5 to 9%, depending on various crops. So all of this has led to very strong cash flow with the farmers. And what were the farmers doing? I think farmers are also putting this cash flow to good use, because they are kind of investing into assets which are income generating. A tractor, a farmer considers tractors like another earning member in the household. So rather than putting this money aside for other discretionary expenses, that farmers are putting this money to buy tractors so that they have an earning kind of asset in their households. So this has kept the demand very strong. And we believe that since the Rabi output is going to be very strong, I know, Prashant, you spoke about few pockets here and there where we have had some unseasonal rains, which is unfortunate. But in a country like India, which is a very large agri country, this year or that year, these kind of things do happen. But at aggregate level, the demand is not impacted, at least for the tractor industry. So going forward, we are very optimistic that with all these positive factors, with the government support continuing in an election year, I think the industry should do very well.
Could you put out a volume growth guidance for tractors in 24 over 23? I was looking at a ICICI Securities note. They are saying, and this is their finding, they say in the last 15 years, on 4 occasions of El Nino, tractor volumes have fallen by an average of 12%. I think a couple of months back, tractor volume growth expectations were between 6 and 7% for FY24. Has that changed for you? Would you like to put out a number, sir?
Prashant, we will not like to put out a number and give you my reason for that. See, right now, the data on El Nino is all kind of very, very half-cooked data. There is something called a spring predictability barrier. Now, that is not letting the entire ENSO data to come in and where we can make some positive or negative indication. I think we'll have to wait till middle of April. Prashant, these are the times of social media. Everybody wants to be first off the block. Even if it is the data is half-cooked or data is not very reliable at this stage. I would rather take a step back, wait for the reliable data to come in, which is just like 2 weeks away. And then we can make a call whether El Nino will be weak, moderate, strong, what kind of intensity the El Nino will play. Having an El Nino is not so negative, let me tell you, if it is a weak El Nino or a moderate El Nino. Still, the rainfall will not be impacted too much. So I think we should wait for middle of April or third week of April to get reliable data. And then we can always come back and share more, what's happening on the ground, how are the farmers feeling, what is the cash flow, what is the sentiment with the farmers. I think all these factors play very well into the rural agri economy.
All right. Hi, Mr. Sikka. I wanted to ask you about the inventory in the system. What is it at currently and what's the normal levels, if you could compare that?
So, Nigel, one of our strong point for Mahindra and Swaraj, both our brands has been a very strict control on inventory levels. So, currently we are running an inventory level close to 4 weeks. This is a long-term average and we continue to maintain that. So, I am not too concerned with the inventory at this stage. In fact, last year, going into the new year, I was concerned that we were running at very, very low inventory level. But since we did not have any supply chain concern through the year, we have been able to build up a little bit of more inventory. So now we are at a long-term average, which is about 4 weeks of inventory for us.
There are some new regulations, right? The TREM 4 regulations for higher than 50 HP segment. They have been implemented now. What is the impact that would have on growth rates, and any indication of when the regulations for the rest of the tractors would be implemented as well? And what would the impact be on the industry?
Sonia, thank you for asking me this question, because this has been a very, very important change in the emission for the industry, and the entire industry has migrated very well without any hiccup. So just to for your viewers to know that on 1st of January this year, we have moved to TREM 4 emission level only for tractors 50 HP and above. So all the tractors which are up to 50 HP, nothing changes for the industry for that. So only for tractors above 50 HP have we gone for one level emission up, which is only 7% of the overall industry. So 93% of the industry is actually below 50 HP, where nothing changes. The whole industry has taken the switch. For both our brands, Mahindra and Swaraj, we have gone ahead. We have sold thousands of new tractors into the market. I think the price has got very well established, and farmers are liking the kind of product that we have come up with. So I see absolutely no concern. Now we are almost 4th month running into this change. So overall things are looking very well for us. The next change is actually called the TREM 5 change, which is still some time away. And as TMA, we are very actively engaged with the government to see what is the kind of roadmap that the government will like us to follow. So currently it's TREM 4, which is only for 50 HP and above.
Okay, all right. So 90% you're saying is below the 50 HP segment. So there's no major impact that you're seeing because of these changes.
Yes.
Got that. Mr. Sikka, appreciate your thoughts. As always, great speaking with you to understand what's happening in the tractor market. And as you said, you're not going to give us any guidance for FY24 because of the unpredictability of the monsoon season. We get that entirely. But congratulations on a decent set of numbers that you've clocked in this particular month. By the way, for the market, it's very, very quiet. I guess it's the truncated week syndrome, where perhaps volumes are on the lower side. Everyone's out and about traveling. So maybe, volumes could be thin today and movement could not be too much on the headline index as well. At least that's the feeling you're getting right now. But the Neeta Mukesh Ambani Cultural Centre was inaugurated on Friday in Mumbai, as we all know. It is India's first of a kind multidisciplinary cultural space, as it showcases India's finest offerings in music, theatre, fine arts and crafts. Several Bollywood and Hollywood celebrities, along with other dignitaries, were in attendance at the 2-day grand event. Here are some glimpses of the mega event.
Welcome to what we hope will become India's finest platform to present our culture in all its diversity and depth. A home to art and culture in all its forms.
For Mukesh and me, the NMACC is a dream come true. For a long time, we had nurtured a dream that India should have a world-class cultural center.
Okay, welcome back. It's an absolutely flat kind of a day. There's a 5 or 6 point change coming through on the index. 17,365 is where we stand at this point. By the way, volumes have picked up massively. I just want to take a look at if there are new stocks which have come into the mix. There are. RVNL is up 6%. I think RVNL did very well last week as well. But Friday was a good day, Thursday was a good day, and today it's another 6% higher. The oil stocks, ONGC and Oil India are doing well. Oil India is up 6% as well now. GMR Infrastructure, I think there was a Kotak note upgrading their rating on GMR Infra, 6% higher, 43 on that one. Tejas Networks is another one which was not there in the morning, 5.33% higher. Big volumes on Tejas Networks. Atul Auto is up 11.5%. I think this would be the sales numbers, monthly sales numbers there. 350 or so on Atul Auto. SML Isuzu, I think we mentioned this earlier as well. Kirloskar Brothers is up 7%. I think it was a decent mover on Friday. It's following up with good gains. Nucleus Software, HOEC are a few other names. Then volumes start to drop off, but I think this is the list of the big volume-led gainers that we have at this point in time. Overall market breadth is a comfortable 4:1 in favor of gainers. Mitesh is with us to tell us what he'd like you to do in terms of taking fresh trades and where. Mitesh, morning again.
Okay, I can't hear Mitesh, so we're just trying to fix that audio. Yeah, go ahead.
Sorry, I think it was a mute by mistake. The idea is that, Nifty kind of hit 17,450 or so. We were 20 points below that and have seen some profitability happening. We've had good rallies in the last 3 sessions, starting from levels of 16,900 to about 7,400. I think this is a level where you will see some kind of supply of profit being emerged, but overall the directional bias on the hourly and the 2-hourly charts remains positive. So my idea would be to use this decline to buy into the index, closer to about 17,320, 300. Excellent entry zones with a stop below 17,240, and I maintain on the upside targets of 17,450, 500, but eventually 17,750 as well. So stay positive. On the stock side, I have a buy on Apollo Tyres. It gave a gap up on Friday and then has seen good follow through today. Buy with stop just below today's low of 315. So let's take about 314 or thereabouts, and a target of around 335, 340 can be looked at on the upside. Balrampur Chini is something which could possibly start a new trend. So that's a buy as well. Keep a stop below 396. Look for targets of 418.
All right, thanks a lot for that, Mitesh. By the way, for the market, still very quiet, so it would be a good idea to get some focus in on the commodity markets now. Manisha Gupta joins in for that. Manisha, after that big spike up in crude, how are things shaping up?
Well, the good thing is that we are still holding those kind of levels there. So it hasn't really been a flash in the pan kind of a thing. So the first day of trading day in April, and you are trading with nearly 5.5% of gains coming in for the crude oil prices. So it's up in Asia right now. You'll want to see on how Europe and US pan out as those markets open as well. But while we've started April on a very strong note and we are trading at a 1-month highs right now, for the month of March, the crude oil prices closed with a decline there. We were down nearly 5%. And then for the quarter as well, it was a sharp decline of nearly 7% for the March quarter. And this has been a third quarterly decline that we have seen come in for the crude oil prices there. Remember, we saw a 15-month lows of $70 a barrel in the month of March as well. So from 70 to 85 has been a strong gain. Actually, it all has come in last 7 or 8 trading sessions where we have seen nearly 15% of a jump up come in for the crude oil prices in last last 8 trading sessions itself. The latest support clearly comes in from what OPEC and allies have done. It has been announced a surprise production cut of 1.16. Most markets were betting that OPEC will not budge from here. But clearly, OPEC is back in action and back in control as well. With 1.16 million barrels per day of a cut, with more weightages really being carried on in sense of precautionary measures and to ensure that there is stability into the market is what OPEC said. So much of the output cuts clearly coming in from Saudi Arabia and Russia. UAE and Kuwait as well have seen more than 100,000 barrels per day of a cut coming in. Other countries like UAE, Kuwait, Oman, Algeria also cutting anywhere between 40,000 to 200,000 barrels per day on your screens there. Well, OPEC output, when you look at the month of March, has been at 28.09 million barrels per day, which is nearly 7,000 barrels lower than what they did in the month of February there. So we are looking at lower and lower outputs there. Total volume cut of OPEC right now stands at 3.6 million barrels, which is 3.7% of the global demand. So that's a considerable chunk going out of in sense of supplies in the global markets. And not just that, the last couple of weeks have been strong because we've seen 400,000 barrels per day of an export halted from Turkey as well. Markets have seen strong Chinese demand coming back. And you also are looking at US inflation easing off a bit. That would mean that US perhaps will not go for aggressive rate hikes. And that is another thing that seems to be supporting the markets right now. Goldman Sachs report that came in last evening suggests that we are now looking at a $95 per barrel of an average for this year and $100 per average of a next year as well. So there are more bullish cues coming in. The market has been short, by the way, so we are looking at short covering and some buying as well, and that could really be supportive going forward in other time zones as well.
Okay, thanks a lot for that. So that is on the crude oil market and what's been happening so far over there. We need to take a quick break, but don't go anywhere. On the other side, our special segment, it's the economy. Lata will get chatting with Somsekhar Vemuri of Crystal Ratings and Jitin Makkar of ICRA to discuss about the corporate debt situation in FY23. Stay tuned.